Equities markets are taking a tumble on Friday. The S&P 500 is down 1%. The NASDAQ is down more than 1%. Here to talk to me about this sell-off is Peter Reznicek of shadowtrader.net. Peter, welcome back to the show. It's been a while.
How are you, David? It's nice to see you again.
Good. How are you? Good. Now, the big news item of the day is President Donald Trump contracting COVID, and the markets are seeing a sell-off as a result. What exactly are investors pricing in? Is it the lower chance of him being reelected due to health issues now, or is there something else?
I would say more for now, at least, because we don't have that much information about it. More of just uncertainty. You have always a knee-jerk reaction in the overnight to that type of uncertainty. News came out around 1 a.m. In the morning, and that's really when you saw the drop. But what I'm seeing currently in the equity markets right now is kind of reminiscent of a concept that I call when what should happen doesn't. This is something that I teach our followers at shadowtrader.net a lot. We call it WWSHD for short. And if you think about it, when what should happen doesn't is really what we're seeing now. I mean, do you see how much equity markets are up off of the lows, not only up off of especially off of the overnight lows, but even from the open? And it's typical that when you have a large gap, because there's such a large imbalance of overnight inventory, which simply means that you have a lot of people piling on short in the overnight. And we know that those overnight players are generally weaker hands. What happens is they tend to reverse themselves at the open, right? And they have done so early from today. You can see right from the open. But then what happens is during the course of the day, it's the trader's job to simply watch to see if that's sustainable or if we roll back down to the lows. And we haven't done that yet. So my main takeaway here, David, is just that, you would think on news like this, it kind of should be more bearish, right? You would think that's an enormous amount of uncertainty that the market would not like. And yet it's not really as bearish as I think, or as you would think it would be.
So if I understand correctly, you're saying that the markets are not overreacting today?
No, they're not.
Okay. Well, we've seen similar geopolitical and political tensions before and uncertainties before. Do you think that markets are moving more or less in line with your expectations then?
No, to be honest with you, I mean, that's the conundrum of the markets that I think a lot of people get wrong. Is it's actually the opposite. I think, they should be weaker, but they're not. And you have to just really deal with what is. You cannot get sucked into what I call scenario trading, which is that sort of thinking of if this, then that, and you just have knee-jerk reactions to whatever the news cycle is.
Right. I guess, Peter, so if you think that they should have been moving lower, then you wouldn't be telling your followers to be buying on the dip now, would you?
Well, no, that's exactly it, David, is that we pride ourselves on trading what we see. And it's actually been quite some time. I run an advisory that deals in short-term options. And it's been quite some time since we've done anything on the put side. And even now we haven't. I mean, obviously, what was coming into last night, there was no way that anybody could have predicted this type of news flow. It's just, that's quite random. But even leading up into yesterday for, I would say, I don't know how long, we haven't really looked at anything on the put side. Obviously, we did when we had the sell-off earlier in September. But since then, we've been rallying off the lows and just kind of going with it.
Peter, let's drill down a little bit deeper into the tech stocks now. You like to look at FANG plus T, which is including Tesla. So Facebook, Amazon, Apple, Netflix, Google, plus Tesla. And tell us about the recent trends that you've been following. You talked about this in your podcast before. Where can prices go from here following today's sell-off?
So it's a little bit of a mixed bag. I will say that overall, there are definitely, I should say, some bearish implications right now, just because we are below trend. We have, defined the trend from March lows. And we snapped that trend around mid-September in a lot of the stocks. So for now, you can technically say that they are no longer in an uptrend. But the takeaway is very similar to what we just talked about regarding the S&P and everything else. Yes, you have now broken trend. You're now technically no longer in an uptrend. But where's the follow through? You're not seeing any downside follow through in the same exact way that you're not seeing any downside follow through in the markets this morning after what you would think is very bearish news that brings a lot of uncertainty to the markets with the president contacting COVID. It's just not following through the downside. So you have to be very aware when you're looking at these charts and you're analyzing the market live, is that you must constantly deal with what price action is actually doing. You have two kind of things in mind: what should be happening and what actually is happening. And the problem with most investors and traders is they get very, very sucked into what they believe should be happening. And unfortunately, they ignore what actually is happening. So yes, a lot of these FANG stocks have come in a bit due to, because we were very frothy. The NDX was very overvalued. Obviously, that's, it was kind of a last in, first out mentality. And they all started coming in a bit. And now they're under trend. But again, where's the major follow through to the downside? It's really just not there. So
what's interesting to me is that NASDAQ fell more than the S&P 500. Was that surprising to you?
No, and it's really not surprising to me because that sort of relative strength, relative weakness baton in this particular market is getting passed on a regular basis, like almost every day. We see that. So some days, yes, some days, no. And then in the bigger picture, like I was saying, they needed to come in a little bit more and have some sort of a rotation out of tech, only because tech was so red hot for so long. So it was just, I think it was just unsustainable, into the beginning of September.
Let's look at gold now. The yellow metal didn't move much today. What's happening there?
Absolutely. So I'm a big gold follower. I'm definitely a long-term gold bull. There was a very large knee-jerk reaction at 1 a.m. Eastern this morning. It's interesting. If you look at an overnight GLD chart, which obviously tracks the futures GCs that are 24 hours, there was a big spike. I mean, GLD ETF, I think $4 or something. GCs is like $40, I think. If you look at GCs, the spike, the low is about $18.95, and we went to $19.23. So maybe like $30 plus on that news. In the bigger picture, I'm definitely bullish. I'll give you two levels that I think are really key, David, if I could. GC's downtrend line right now, that gold has been in a downtrend for a little while. It's a minor downtrend, but it's a downtrend that's, just kind of correcting up into the early August rally. The key level I want everybody to watch for there is 1935. 1935 breaks that downtrend and gets us right back into an uptrend. Obviously, we're in a longer term uptrend, but breaks this current correction. And then in the dollar index, there's a key level that everybody should watch. When the dollar rallied recently and threatened to break its downtrend, it rallied up to 94.74. And that is a very important line in the sand in the DXY. As long as the dollar index remains below that swing high of 94.74, I would say that the outlook for the dollar is weak, which obviously makes the outlook for gold bullish, because as of now, at least, I know it's not like this all the time, but the dollar and gold are moving in lockstep, oppositely, obviously. But, they are definitely very highly correlated at the moment.
That's an interesting trend that we don't typically observe. Why do you think it's happening now?
I don't really know the answer to that, David. It's interesting. These things sort of, move and shift all the time. And I watch correlations very closely, and it's really just a situation that, they work until they don't. And they go through, cycles where it's tight, and then go through cycles where it's not anymore. It's interesting.
The 1 month trend of the dollar, the DXY, has been down. And some analysts I've talked to have said that actually, when you look at it, gold should have been moving a lot higher because of this downtrend, but it hasn't really done that. So what's your take on that correlation there? Should the gold price have moved higher?
I think the gold price is doing kind of, yes, potentially I think you could say that, but there's also some technical stuff in the DXY. I'm looking at the chart right now, where the reason that we bounced recently, and the only reason I think that September has been a bullish month for the dollar, or was rather, the month of September was kind of a bullish month for the dollar, is only because we came into some trend line support around 92. So this is really the key level, like I was saying, that we need to watch. This 92 to roughly 95 area in the dollar index. If we stay within that area, it's fine. Gold is probably sideways to maybe slightly up. But we start breaking underneath that 92, that's where I think you really start to see gold accelerating, especially if it's above that 1935 trend line, as I was saying, and then we would set up the move back to 2000, I believe.
All right, we've talked about the gold levels you're looking for. What about the equities indices? What are the next levels you're looking for the NASDAQ and for the S&P 500?
So right now in the S&P, it's interesting because the activity from the recent highs down to the lows has created somewhat of an inverted head and shoulders, which for technical people is actually a bullish pattern. And it also sets up some key Fibonacci retracements from that high to low, so we can gauge just how strong the recovery is or isn't. So the S&P basically, when it made the swing high off the bounce, which was actually yesterday. Interesting enough, David, it went right to a 50% retracement. The high of the SPX yesterday was literally right to the halfway point between the September 2nd high and the September 24th low. So that's something that investors should keep in mind. We have now bounced exactly halfway and backed off. Now think about this in terms of what I was saying with that whole when what should happen doesn't. Usually when you get to halfway, you have some sort of correction backwards. Well, today we got a correction backwards, but why? Only because of a very serious news event overnight. And what's happening right now? Rallying. The S&P is at the high of the day. I'm seeing futures just tested the highs at 33.54. So again, it's that when what should happen doesn't. So if we go higher here and go back to yesterday's high and retest that 50% retracement again, I would think higher. You're going to move to the next level. You're going to go to the 61.8 retracement at 34.42. So again, it's very important for people in this market just to keep in mind not to be sucked into what they think should happen, but to be watching what is happening.
All right, so it sounds like you're bullish on, well, short-term bullish on both equities and gold. What are you more bullish on then?
In terms of different indices, or how do you mean, or between equities and gold?
Yeah, between equities and gold.
I think that they're kind of two separate things in that for me and my particular style of trading, I look at gold as a much more longer term play, and I look at equities as a very short term play. So, I generally don't opine on the strength or weakness of equities past like a 1 to 2 week period, because that's my bailiwick. That's the wheelhouse that I stay in. So I would have to say overall, if you ask me in the longer term, gold is probably, a safer bet than equities in the longer term. But in the shorter term, there's lots of opportunities in equities on both sides of the trade.
Finally, are you seeing any additional risks besides the news event that happened today that you're looking out for?
Yeah, I think the next event on the horizon has to be the election. I think, it's 35 days out roughly or something like that. And we haven't seen that much volatility yet surrounding it. But I still think that there has to be some volatility coming, some sort of increase in a little bit of nervousness as that date comes a bit closer. So I think that's the next news event on the horizon.
Are there some pending news items that are still lingering that you would like to see developments on before the election day?
Probably the stimulus. Right now, as we know, they have passed it in the House, but nothing's happening in the Senate. So yeah, if I had to pin it down to one thing that's still sort of a wild card that needs to be resolved, it would have to be that next round of stimulus.
Perfect. Peter, thanks so much for coming on the show today. I appreciate your thoughts.
Thank you, David. I appreciate it.
And thank you for watching Kitco News. What are your thoughts about where the markets are headed? Comment in the comment section down below. Stay tuned and hit that notification bar for the latest updates. Thank you for watching. I'm David Lin.